Hello and welcome to this channel. My name is Anton, as you may have guessed already from the name of the channel, and I'm going to talk with you about investments. I'm an amateur investor based in Europe. I started my path learning about investing maybe 6 or 7 years ago, mostly through YouTube and online sources. During that time, I've learned some things, I've made some mistakes, but most importantly, I stayed consistent. And from 2022, I grew my portfolio by 3,000 euros every month. So in December 2025, it hit 20,000 mark, which is the most money I've had in my financial accounts. Seeing these results motivates me to put even more money to work for me in my portfolio. So this year I decided to increase my monthly contribution to 1,000 euros. With that in mind, my goal is to hit 30,000 in my portfolio by the end of this year. And right now I plan to show you exactly how I structure my portfolio and the returns or losses I've made so far. Bear in mind, this is not a financial advice in any way. I'm just sharing what I have and know for entertainment purposes and hopefully for you to learn something as well. The way I structure my portfolio is I put all my money into a handful of individual stocks. I like researching companies, learning about them, about their modes and business models. So this works for me. I don't operate with huge sums yet, so I prefer having less diversification and more risk to try and generate better returns. Okay, so let's dive in. As promised, this is my actual portfolio. I'm using Trading212 as my brokerage, so for those of you familiar with the platform, you already know the user interface. I'm not affiliated with them, I just use the tool. On the left side, we have a total account value, total return, rate of return, deposits, and also a nice graph that visualizes the history and the performance of the whole portfolio, as I currently have it set to max. And if we go to the beginning of this graph, we can see that the portfolio has started from the February 1st, 2022, and then each month since then, I was depositing roughly 300 euros per month, getting us to the point where we are now at almost 6k in total return with 18,000 net deposits and total account value at 23, almost 24,000 euro. On the right side here, I currently have displayed my asset allocation covering all individual stocks that I own, and they're ordered by value from the highest value to the lowest value. And as you can see, the first one is Google. Google is a massive position relative to my portfolio size, mostly because of its own growth. As you can see, for me, it already doubled in value. Currently sitting at 4,300 with 2,002. So this is my entire portfolio right now with a total value of... there was a lot of negative sentiment about the company. There were news about potentially splitting Google Chrome from Google, ChatGPT disrupting the search business. However, no disruption was seen from Google's numbers. Their revenue and profits continued growing, so I thought this is an opportunity to buy more of an amazing company at a discount. Okay, so let's get back now. Next is Amazon. There are a lot of business verticals that I like about Amazon, especially AWS. They invest a lot into CapEx right now to capitalize on AI demand, thus profitability metrics don't look that impressive, so the multiples are not as high as for some other big tech companies. However, once the AI infrastructure from AWS satisfies the demand, they can pull back on spending and focus on profitability. This is a top 2 position in my portfolio that I expect to do very well in the next 15 years. Okay, going back to the list. And next is ASML. ASML is my top 3 at the moment, just because also how quickly its price went up. As you can see, it currently has 1,300 in gains with the position size of 2,900 euros. It is also the first European company on the list that I have the benefit of buying in euros, and as you can see, my average price in it is at 672 euros, and the price right now of the ASML stock is 1,244. The reason I started buying ASML is because it's basically a monopoly on lithography, which is necessary for chip manufacturing. They're so far ahead in their research and technological advancements, there is no competition at this point. I like the company and I believe it will do very well. I was also buying it on a dip. I didn't exactly time the bottom, but it was also not my intention to do so. I just saw a great company at an attractive price and I couldn't miss the opportunity. I usually deposit money to this investing account every month and then I try to find an opportunity, or I just simply dollar cost average. Moving on to the next one on the list, and for me it's the fourth position, which is Netflix. It just dipped by almost 10% after earnings because they gave a weak guidance. I'm not bothered. I think the company is still a very attractive investment, and I knew going into the stock that it's a volatile one. I see Netflix as a very resilient company that produces more and more content to satisfy a growing subscriber base. Definitely want to own an asset like that in my portfolio. And moving on to the next one, and for me the next one is MasterCard. MasterCard wraps up the top 5 in my portfolio, and as you can see, the top 5 make around 65% of my portfolio, so I'm quite heavily concentrated. What I like about MasterCard is that it's basically a duopoly together with Visa in the business of financial networks. MasterCard provides fast and safe ways to connect merchants and customers. Moreover, MasterCard provides a lot of value-added services like fraud detection, cybersecurity, data services. Since they have such a massive scale, almost nobody has this much data about transactions. So to me, it's an attractive business that won't be disrupted anytime soon. Moving on, and next on my list is S&P Global. You can see that this is the first position that I'm in the red on right now. The S&P Global is a company that owns S&P index data and rating businesses. There was a scare after Anthropic showed that AI can conveniently analyze financial data. I don't view it as a disruptor to businesses like S&P Global, so I'm not worried that the price has went into the red for me. I expect this stock will do well in the following years. And right now I treat it as an opportunity to add even more money into this position and grow the size of it. Okay. Going to the next one, let me scroll just a little bit. Next one is Costco. And Costco is an amazing business. I like the business model, I like the scale, I like all the metrics. The only downside is that Costco is always so expensive. It's hard to justify the entry price. My average price is $644 at the moment. I haven't added to the position since 2024, I think. I probably would have added more to it when it dipped here to around $850 at some point, but at the time I didn't have free money to invest in my account. So not all the opportunities can be captured. And also Costco itself is rarely on a significant dip. It's such a resilient business. Moving to the next one, and in my portfolio it's another red position, and it's Booking. This is one of the mistakes in my current portfolio that I'm trying to correct. As you can see, it's in the red right now, and the actual loss is made even worse by the fact that I invested into this Booking position in dollars, and now I have to account for this currency exchange impact as well. Now I'm building a position on a Frankfurt Stock Exchange where I don't have to convert my euro money into dollars. The company itself has very strong fundamentals and grows fast, so I expect bright future returns from it. Going to the next position now, and the next one on the list is Microsoft. Microsoft is only at a 5% position right now because it gave up some gains recently, but I expect it to grow substantially. And currently I'm also considering adding more to this position. You can see that it slowed down and now it's reaccelerating back up. My position is still in the green because I was buying way earlier. The thing with Microsoft is that currently they have a concentrated bet on ChatGPT. It's their primary Azure client, and also they invested into it quite heavily. Their Windows doesn't have the best sentiment on the internet as well. But I consider this to be temporary because Microsoft is a software company with a subscription business model, and almost perfect fundamentals. And I'd like to increase the size of this position so that it's not sitting at a 5% weighting in my portfolio, but maybe grows double in the value with the help of either my deposits or growing by itself. Now at the bottom here we have several riskier positions that I have in my portfolio, although they're also smaller positions, around 2%. And we're starting with Duolingo. I think there's nothing wrong with the company fundamentals, but as you can see, it had a steep decline, falling from $500 to now it's $100. So it's very significant. And I was buying it also at the wrong time, sometime at the end of 2025. So currently I'm heavily in the red on this position, almost 650 euros, which is 53% of the whole position. And you can see that my average entering price was $211. But I also reduced it because I was buying somewhere here as well. And the drop happened because they reported that their focus is shifting from revenue growth to growing daily active users. With this news, the stock got re-rated and the price adjusted. I think that long term the company is doing fine, and I'm expecting to be in the green with this position in a couple of years. With this one, I know the reason why I bought into the company, and unless something changes drastically, I don't intend to sell it. I'll likely continue adding to the position, but I also don't want to get it much bigger than 2% of my overall portfolio, because I know that it's a volatile and a riskier stock. Another riskier bet that I have is down here, Nike. I'm currently down on it by almost 40%. And the latest quarterly report didn't inspire much confidence. I was hoping this could be my quick recovery play, but if it doesn't have a turn for the better by the end of the year, I might eat the loss and reposition the cash to a different opportunity where growth is faster. I like the company and the brand, but I think right now this position does not benefit my portfolio of fast compounders just as much. I also made the position very small, knowing it's a higher risk. Moving on to the next one. And as you can see, we have two stocks left, but one of them is Booking that I already covered. This is just my euro position that I'm building up. So the last one is Intuit. I owned it in the past and just started building the position again. It's a software company in the financial domain with sticky subscription model. There is also a fear of disruption from AI, both from SaaS and from financial sides. But all the revenue, income, profit, cash flow keep growing for Intuit and growing fast, while the price goes down. This doesn't make sense to me, so I'd like to rebuild it into a bigger position while it's at this price. Previously, I sold Intuit only because I saw a huge opportunity in Google. At the time, Intuit was more or less flat for me and there was no huge catalyst, but with Google I saw much faster growth, so I decided to switch and rebuild my Intuit position at a later day. And this proved to be a good move because you saw my Google position at the moment, and now I think Intuit is at a very attractive price, so I'm building the position back up. So this is my entire portfolio right now with a total value of 20k plus from the start of 2022. I'm accelerating the deposits this year as I see results that I like and as my confidence grows. Of course, all stock portfolio fluctuates a lot, so I have to be patient and always remember why I bought a particular company and what could be the reason to sell. What I'm trying to do with my investments is not to sell at all, just let them grow. But this implies not making any mistakes, and I'm still learning. I'm glad to share with you my investment journey. It would be interesting to learn what is your investment strategy, what are your thoughts on my portfolio, and what you would have done differently. That's it for now. See you next time. Thanks. Bye.